are seeing corporations. We didn't expect this. We expected institutional interest, but we didn't expect corporations to substitute Bitcoin for cash. MicroStrategy was the first. All of its cash is now in Bitcoin. And in fact, it did an offering so that it could buy more Bitcoin. It is a technology company. I'm a little suspicious. I don't know what the SEC is going to do with this, because this is not its base business. This is its cash. Square has put 5% of its assets into Bitcoin. And we're seeing more mature companies like PayPal enabling the buying and selling of Bitcoin on its platform, as Cash App does as well. Well, if companies in the S&P 500 were to put 1% of their cash into Bitcoin, that would increase the price of Bitcoin by $40,000. Today, it's close to $30,000. So that's more than a double right there. If we saw 10%, of course, that would add 400,000. And I just told you, MicroStrategy has put all of its cash in. Perhaps emerging markets will be faster in terms of adoption. But we have been very surprised at how quickly this has happened in the United States. Institutions are going to have a significant impact on Bitcoin's price. We're seeing all kinds of evidence today. I just gave you some about corporate cash, but we have the OCC, before Brian Brooks departed. In last July, they allowed custody banks to federally chartered banks to custody Bitcoin. And just within the last month, they have allowed banks to actually become nodes on any public blockchain so that they can enable much less expensive and efficient settlement. So that is again, a little faster than we would have expected. We've seen Fidelity, the infrastructure has certainly been moving into place for a while. Fidelity, the Intercontinental, ICE, the Intercontinental Exchange, the CME, and Cambridge, the consultant wrote a paper about, it was a little more than a year ago, basically telling institutions, hey, this could be a new asset class. And it has a very low correlation. In fact, it has the lowest correlation if you compare Bitcoin with all the other major asset classes out there. It has the lowest correlations of any other combination. So we believe that here you can see that if our analysis on how institutions will look at allocating to this space is correct, and this is using a Monte Carlo simulation, institutional involvement could increase the price of Bitcoin. Again, it's 30,000 now, by 200,000 if they want to minimize volatility, to 500,000 if they want to maximize their Sharpe ratios. So quite a bit of work. Yassine El-Mandra, our analyst, has 2 white papers. And I should mention, all of our analysts have white papers, more extensive white papers on our site, and most of these topics.
Kathy, can I ask you a quick question? So, because we've done a lot of analysis on Bitcoin among financial advisors and their clients. And clients are talking about it, advisors are talking about it. Do you think, based on your analysis of Bitcoin, that eventually it makes it to clients of financial advisors? Is that going to be in the form of a Bitcoin ETF? Is it going to be in the form of something like Grayscale? Or will it be in the form of investing in an active fund or an active ETF like ARK, or we know Guggenheim just got a mandate that they can allocate as well? Where do you think that the allocation for our clients will come from in the form of Bitcoin?
Well, we still think, I know that the ETF question is still out there. And we still think the SEC is reticent, although I will say the new SEC chairman, Gensler, he spent time at MIT between his stints in the government and is very pro-Bitcoin, interestingly. And so he understands it more. I think the showstopper short term is Bitcoin. If you look at its market cap, it's $600 billion. That's like one large cap stock. So I think that what we need is for more equivalent of market cap or network value in Bitcoin. And then the SEC will be much more friendly to it. The other interesting thing that's happened at the SEC is the head of the SEC's crypto research division has been promoted to report directly to the chairman. So I think we're going to see a lot. First of all, there's more understanding. I think once, I'm not going to pick a number, but I believe it'll have to get well past $1 trillion because an ETF, you know, the flood has to be satisfied. The flood of demand has to be satisfied. So it's going to have to get well over $1 trillion, $2 trillion, I think, before the SEC will feel comfortable about an ETF. But in terms of other funds, they may be more open. Funds that can close, that don't have to buy, mutual funds don't have to buy. They can allocate elsewhere if they get flows. So it may happen, it may be that mutual funds might get first dibs there. In the meantime, GBTC, it's not an ETF, it is it's a grantor, the underlying is a grantor trust. That seems to be the way that 40 Act funds have. That's how we have gained exposure to Bitcoin since 2015. But I do think there are going to be a lot more alternatives that are less expensive. And I know of some private funds that are less expensive than GBTC. They're more like VC funds now that will ultimately turn into hedge funds, maybe carry down the line. So there are all kinds of wrappers evolving, I think, for crypto. I think that Bitcoin will be the first global digital currency that will serve as a store of value. So digital gold. And the reason we believe Bitcoin will keep that role at a minimum, and we think its role is going to be much, much higher than that. I just gave you the cash example for balance sheets. But the reason we think it's got the role is it is the reserve currency of the crypto asset ecosystem. Most other currencies in the crypto world are denominated in Bitcoin. So it's the unit of account. It's the store of value. And it is the most secure network by far. To hack the Bitcoin network would take billions upon billions of dollars. It's much easier to hack into the Ethereum network, and we're seeing a lot of that go on. But when it comes to high value transactions, they'll probably stay on the Bitcoin network. So the one weakness it has is means of exchange, one of the three roles of money. But the means of exchange role that it does have is for very high value transactions, which would never take place on the DeFi network.